I think there may be a bubble in a small part of the stock market, not all of it. If you actually analyze it by segment, by this, that's not true. And I would not be a buyer of Treasury. I think Treasuries at these rates, I wouldn't touch them with a 10-foot pole.
My son.
Yes?
I'm not touching that with a 60-foot pole. Next caller.
It's decision time for Bitcoin. This head and shoulders pattern says we could be looking at another 28 to 30% correction to the downside in the near future. But whatever you do, guys, make sure you do not sell your Bitcoin because you'll just be handing it over to the institutions. You have to think long term.
I can see it in your eyes. You have the look of a man who accepts what he sees because he is expecting to wake up.
Wake up. I said wake up!
You are doing exactly what the whales want you to do. There are some pretty powerful players in this market, and they are very good at getting what they want. And what they want is for you to sell your Bitcoin. So as weekends sell their bags and the price drops, whales are profiting. But there is some strong bullish evidence that says this correction could be nearing its end. When Bitcoin rallied to its new all-time high all the way up to $42,000, it was fueled by retail investors as the institutions sat back and waited for the right time to dump on us. But there was some very clear clues this was going to happen. We'll take a look at something we've discussed very often on this channel, and that would be the inverse correlation between the DXY and Bitcoin. Guys, one thing is for sure, Bitcoin is about to make another huge move, and the only thing you can do is be ready and have a plan. So make sure you stick around until the end of the episode because I'm going to share with you my bullish and bearish scenarios for Bitcoin in the short and long term. So don't go anywhere because you do not want to miss this.
And then they did dumps. They call them dumps, big, massive dumps.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
All right, guys, welcome back to the channel. Johnny here. Let's get right into today's episode so I can get this uploaded and to you as quickly as possible. So, crypto analyst tells investors to avoid becoming whale food as the Bitcoin price drops. Basically, this goes in to the idea of the MPI, the miner position index. Looks like it has made a local top, letting you know that miners may be taking a bit of profits and selling some of their bags. Now, the cryptocurrency market has seen volume surge over the past few weeks, but this sell-off started over the weekend when trading volumes were pretty low when it comes to institutions. So as you know, the CME, it does not trade on the weekend. And over the weekend, it's basically just your retail crypto traders. And that is when we saw the sell-off this weekend. Now, one thing about this is it's very long overdue and it's actually very bullish for Bitcoin. So miners, they need to take profits. They need to keep the lights on. But, whales, they're really not, they weren't involved with the push up to 40K, but they are involved for the push down to 32. So what we're looking at basically are just whales taking profits, and they know exactly what they're doing. We've got retail, FOMO, panic selling, and then as soon as the price starts to turn around, which it may be getting ready to do right now, we will see everybody buy back in for much more than they paid. So don't be that person that does that. Let's take a quick look at the chart here. So this is the Bitcoin daily chart. As you can see, we did come down and we got a test of this 21 daily EMA, and it looks like we might get another one here very soon. Now, from this zoomed out perspective on the daily, this does not look very bearish. It actually does look like we could be nearing the end of this correction. But if we zoom in to, say, the 4-hour chart, you get a very different picture here. You can see we very clearly have a head and shoulders forming, but that doesn't necessarily mean that it needs to play out. So let's go ahead and bring up some of the chart drawings here. We do have, this ascending broadening wedge, which in a bull market can have a very bullish bias, and it really kind of depends on what the forces are that are making this we'll call it an accumulation cylinder formed. So since the breakout back here of this consolidation period where we came up and met that $19,500 resistance back on the 11th of December, Bitcoin has been forming this very strong, almost an accumulation type pattern as it continues to push to the upside. So the whales, they sat out this run here. So we got this correction that came all the way down to 27, and then we got the push all the way up to 42. Now at some point in here, the whales decided to step out of the trading game and let retail push the price of Bitcoin all the way up to its all-time high at $42,000. We also have a logarithmic regression curve right here above the Bitcoin price. It was sitting just above that 42K level. So we could be coming down to test this one, which is all the way down at 21,000, 23,000, depending on how long it takes Bitcoin to come down and test it, if it does at all. So what we are looking at here is a possible head and shoulders. We are also looking at a bullish idea, but first let's run through the bearish idea. So as you can see here, I have a few red trend lines. These are possible necklines for this head and shoulders breaking to the downside. And if we do get a move to the downside, it will be a pretty severe correction. Let's go from the top to the neckline. We'll just pick one right in the middle here. And if it does start to break down, we will pull out our fibs and try to get a more accurate target. But, you know, if we bring this down to the point of breakout, this gives us a pretty steep movement to the downside, all the way down around $20,433. So that would be a very significant correction, upwards of 37%, effectively putting Bitcoin all the way down to the 20K level, which, you know, honestly would not be a bad thing. It would give us a great opportunity to re-enter into the market, and also, you know, be able to kind of refill the bags before this move gets going again. So that's the bearish scenario. That's what we're looking for here. You know, if you're looking to trade this, the first thing you're going to wait for, because there is a very strong possibility this could break bullish, you're going to wait for a volume confirmed breakout across this lower trend line, at which point there should be a bearish confirmation or a retest of this trend line, and then the price should be headed lower from there. So what you would want to do is to set your limit sell orders above the price near this lower trend line, and as the price climbs, coming up for that bearish retest and confirmation, your orders would get filled and you would want your take profits starting at 25,000, heading all the way down to where I have my limit buy zone at 19,552. Now, I do not short Bitcoin in a bull market, but I do have quite a few buy orders down in this area. Okay, so that is the bearish idea. Let's talk about the bullish idea. So we discussed really what was responsible for this correction, and it's whales and miners dumping on retail. Here is a screen grab of the chart that I had spoke about a few episodes ago. Basically, this just goes through and it presents some data that shows there's a statistical correlation between a move to the downside and a move to the upside between both Bitcoin and the DXY, and also grayscale Bitcoin as well. So this says, you know, that for every 2% move to the upside out of the DXY, we get anywhere from an 18 to a 24% correction out of Bitcoin, and every 1% move to the downside out of the DXY, we get anywhere from a 14 to a 20% move to the upside out of Bitcoin. So that's a fairly large range, but you know, there are a lot of factors here at play. But you know, this dump really, it had some clues, okay? So it definitely had some clues. So going into the weekend, as you know, the DXY is not traded on the weekend, but it did start to get this little pump. So we started to get a bit of a pump, put in a green Heikin-Ashi candle on the daily before the close on Friday out of the DXY. And then, you know, that would line up with the 6th of January. So as you can see here, when the DXY started to get the pump, we did get a bit of a lag before the pump out of the DXY started to show up in the Bitcoin and GBTC chart. So it was about a 3-day lag, letting us know that retail really drove this price for about 3 days as money was moving out of Bitcoin and back into cash dollars. So what are we looking for here? So the DXY did start to put in a red candle here on the daily. It is down significantly. It's back under 90% on the the index, and we'll say the peak of this move to the upside would be January 11th. So as I mentioned, there is about a 3-day lag from the move to the upside out of the DXY and the move to the downside out of Bitcoin. So if this DXY move peaked on the 11th of January, let's go ahead and plot that on our charts. That was just yesterday, so we're plotting that here, 11 January, right here. And as you can see, it does appear that we could be rounding the corner on this corrective move. So as the DXY continues its push to the downside, we might be looking at further continuation out of Bitcoin and GBTC as well. So that correlation is still relevant. It's definitely still playing a factor in what Bitcoin is doing. But there is some extremely bullish news. So I'm sure you've heard of Guggenheim Investments. They filed with the SEC to put together their Bitcoin fund. And this is effective January 31st. So this could be gearing up to see some pretty intense price action out of Bitcoin. And here is the plan. So we do know that Bitcoin is going in one direction or the other. And the other day, I did speak about this possibility of this being a accumulation funnel in what would be Livermore's accumulation or speculative funnel, letting us know that we could be looking for a very significant move to the downside. So right now, we should be at 0.7. Looking for a move up to 0.8 would put us over $50,000, at which point the speculation chart does show another move to the upside. That would, I'm looking at either the 1272 or the 1618 there. The 1272 is at $69,000. The 1618 is at $87,338. And then the blow off move, the last push to the upside, is sitting right at around $133,844, which would consequently be followed up with a very sharp move to the downside. And at that point, we would be looking for a lower high to let us know that we are about to enter a bear market of some time frame. So it could be a short-term bear market, or it could be an extended bear market. It really depends on the market structure at that time. So as we mentioned, Guggenheim's SEC clearance is valid on the 31st. But one thing we need to look at as well is the on-chain metrics. So, despite Bitcoin's drop, on-chain trends for this market remain bullish. This guy, Alex Larson, who's a venture investor at Blockchain Capital, said on hodler trends for Bitcoin that it's looking pretty good for growth rates in the hodler segment. Nice and steady growth for Bitcoin through the bear market. Retail is starting to pop up. But for most of 2020, this was institutionally driven. So everything we've really seen so far, except for that last push up to 42K, has really been institutionally driven. So another positive sign to look forward to is Grayscale Investments reopening private placements for its cryptocurrency investment trust. This is a big deal. This lets investors know that they have the ability to come in and purchase shares out of Grayscale's trust. So, and then those shares would have to be locked up for a minimum of 6 months. So we could be looking at another massive move to the upside. And this is how it will start. So we have a possible W pattern forming here. What we're looking for is a candle body close here on this 4-hour chart, somewhere above the $35,257 level, at which point we may get a move back down. And it looks like we might have already gotten this. So this chart is a bit old. We've already came down and retested this 21 daily EMA, and it does appear to be possibly moving it to the upside. So this would have been the best buy entry here, right at $31,980, and then looking for a push to the upside, testing this upper trend line, at which point a breakout would be a pretty serious price move. On the other side, if we do get another bullish push out of the DXY, and there are some other market fundamentals affecting the Bitcoin price, we may see another massive sell-off. But again, we are looking for the breakout of this lower trend line. And until that has broken out, we are still in this very, very bullish structure. But a breakout to the downside would put us right above $19,600, somewhere in that area. And the VPVR actually adds some confluence to that idea as well. But what we are looking at, if we do get the bullish push I can promise you it will be one hell of a move. Our first one looking at about a 63% move to the upside, followed by a 92% move, and then taking us all the way up to $133,000. So get ready. If price action bounces off of this lower trend line and heads to the upside, we could be looking at a pretty hefty Bitcoin price, and we could be looking at it fairly quickly. So if we just take a quick look at what happened back in 2012, the last time we saw a parabolic move of this strength, Bitcoin really just kind of took off. After putting in this double bottom structure, it just shot up to the upside, and it made it all the way up to the 1618 extension from the previous low of this bull market, at where it came and got this very strong sell-off here, but it did continue this bull market run all the way to the upside, which was a very, very historic run for Bitcoin. But it did get this nice top here, this very small bear market that lasted a few months. I think that's what, October, November, until April. So yeah, all the way through the spring and summer, and then Bitcoin shot up again right around the same time it did this year. So what did Bitcoin do this time back in 2013? So early December, Bitcoin started to get a correction in 2013 that lasted well into April of 2015. So hopefully that's not what we're looking at now. But if it is, we could be looking at some sort of scaled version of this. And to be honest, I really think that this bull market is just getting started, especially when you consider the wall of money set up to just kind of funnel its way into Bitcoin throughout 2021. So again, this is where we're at. We're looking at the possible head and shoulders move to the downside. But what we're really eyeing is the possibility of this speculative funnel blowing to the upside, giving us this last best entry right down here at 32,000 US dollars. All right, guys, that's all I have for you today. Please like, please subscribe. Don't forget to join the free Telegram group. Link is in the description below.
6, 5, 4, 3, 2, 1. And booster ignition, liftoff of Space Shuttle Discovery, taking the space station to full power for full science.
This is Mission Control Houston.
Discovery roll program.
Roger, roll, Discovery.
Discovery's roll maneuver is complete. It is now in a heads down position on track for its flight to